By revenue, Starbucks is the largest coffee company in the world and the second largest restaurant in the world. Starbucks has been making coffee for 51 years. Starbucks has also developed one of the most iconic and largest brands in the world. But with all that said, Starbucks stock is down 37% from its 52-week highs. This has been a video I've been meaning to make for a while because I feel I really understand Starbucks' business really strongly. So in today's video, I'm going to be presenting why I think Starbucks should be a must-own stock in any long-term dividend growth portfolio. We will be quantitatively and qualitatively going over Starbucks' business, going over the numbers, the fundamentals, and everything. If you're new here, my name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. If you like this video and content like this, please, I beg you guys, subscribe, turn on post notifications, smash the like button while you're at it, and of course, roll the intro.
Hello, I like money.
To start this review off, let's go over the history of Starbucks. Starbucks was founded in 1971 by three friends, Gordon Bowker, Zev Siegel, and Jerry Baldwin. Three friends had a passion for coffee and tea and initially just wanted it to be a small startup coffee shop in Seattle. But 10 years later, now interim CEO Howard Schultz visited and was captivated by Starbucks' business model. Schultz joined the company in 1982, and it was on a trip in Italy where Howard Schultz realized that Italy's coffee culture could be brought over to the United States and had large potential. Schultz integrated this into Starbucks and it eventually started expanding, and by 1999, Starbucks successfully expanded to China, Europe, and Canada. In 1991, Starbucks was the first ever private company to offer stock options to their employees. But it was in 1987 when Starbucks initially developed the green iconic mermaid logo we all know and love today. 84 initial founder Jerry Baldwin founded Peet's Coffee and Tea. And in 1987 he sold his shares of the Starbucks Corporation. And eventually the other two founders sold their shares as well. This left Howard Schultz in complete creative control of the company. In 1995, Starbucks started making their iconic Frappuccinos. And in 1992, Starbucks went public for $17 a share. If you would have bought a share at the IPO, you would be up only 23,000%. In 2017, Kevin Johnson would take over as CEO and Howard Schultz would step back from the company. But now former CEO Kevin Johnson just retired and surprise, surprise, Howard Schultz is going to be the interim CEO. And now that leads to today. Starbucks has 33,833 stores in the world right now, 15,000 of which are in the United States, and they're in over 80 countries right now. So when you invest in Starbucks, you definitely get a diversified set of revenue streams. But unfortunately, this has kind of hurt them recently because they have a lot of stores in China, and if you guys don't know, China's having big lockdowns right now because of C-19. But thankfully, those stores are starting to reopen up. Now, let's go over the top 5 shareholders of Starbucks. You could see their largest stakeholder is the Vanguard Group, which is very good to see because they invest in high-quality companies and they own 8.44% of Starbucks. Next, BlackRock owns 4.48% of it. Then SSGA Funds Management owns 4.03% of it. Geode Capital Management owns 1.81% of it. And then Northern Trust Investments owns 1.4% of Starbucks. Right now, Starbucks is trading at a PE of 22.04. I know Seeking Alpha doesn't say it, but sometimes they're wrong on this. Historically, this is a really good value considering Starbucks usually trades in the high 20s, low 30s. And I think that with Starbucks' pricing power and brand, I think 22.05 is a definitely good PE to start buying for. Over the last year, they're down a whole 33%. They're currently trading at a historically high yield at 2.46%, and they have an EPS of 2.86. Their 52-week high was $126.32, and their 52-week low is $68.39. Thankfully, I bought in the low 70s, mid 70s, so I definitely think I got this stock at a steal. Now let's go over Starbucks' dividend. As I mentioned earlier, they are trading at a historically high dividend yield right now, so it is a very attractive time to get in on this company if you haven't bought in previously. Currently, their yield is 2.51%. Their annual dividend payout is $1.96. If you guys can see in this chart, Starbucks' dividend growth for the last 10 years has been really large and consistent, which is exactly what I look for. Currently, Starbucks' payout ratio is 57.83%. This gets a thumbs up from me, and I think Starbucks will continue to grow their dividend in the future. Starbucks' 5-year dividend growth rate is 15.11%, which is very good. And they've been paying their dividend and growing it for 12 years straight, which is good for Starbucks. Now, let's talk about Starbucks' share buyback program. As you guys can see on the chart, historically, Starbucks has bought back their shares, which is good for shareholders because we own more of the company when they buy back shares. Now, if a company buys back shares, it definitely is a bonus when I look to buy them, but it won't make or break my decision on whether I want to buy a stock. Now, recently, guys, if you didn't know, Starbucks suspended their share buyback program as they're going to reinvest that money back into their employees and stores. I think that this is an investment to make their business stronger fundamentally, and I think it's just a temporary decision, so I'm definitely all in for it. Share buybacks typically happen when times are very good, so it doesn't really surprise me that they're suspending it right now. I expect Starbucks to reinstate this program in the next 1 to 3 years. Now let's look over Starbucks' free cash flow. For me, free cash flow of a business is probably the most important fundamental when I look to buy into a new position. A company can use free cash flow to pay dividends, do share buybacks, reward their shareholders, pay off debt, make reinvestments back into the business, etc. For me, I just want to see consistent growth and an uptrend over time. So you can see over the last 10 years, Starbucks has grown their free cash flow. We could see that in 2018 they had one really huge spike, which happens for some other companies. For example, Target, they had a huge spike too. But it just matters that it's gradually going up over time. And then you guys can see in 2020 it was basically flat. And then in 2021 it rebounded. And it just shows upward trends over time in growth, which is just what we look for. Now, Starbucks does have a bit of debt. They have $23 billion. They use that money, I'd assume, to grow and expand, so I approve of it, and they can definitely pay it off. Starbucks' revenue stream is split up into 3 categories. So the biggest one, which takes up 60.8% of the revenue, which is the beverages, coffee, tea, frappuccinos, etc. Food, which honestly surprisingly makes up 17.8% of the revenue. The sandwich that's been sitting there for 5 years. And then other, which makes up 21.3% of the revenue, which would be gift cards, cups, etc. Now let's go over how Starbucks is really a bank. Yeah, you heard me, a bank. Starbucks has an app where you can pay for food and drinks on your phone, and you just put money into your account there. But here's the deal, you can't take the money out. Once it's in there, it's in there. You can only spend it on food and beverage. So Starbucks can use that money to reinvest back into the market, reinvest into themselves, make new stores grow, etc. Polymatter made a really good video on this, and here's a clip from the video. Go check him out, subscribe to his channel.
Because of its size and customer loyalty, people are not afraid to keep decent chunks of their money in their Starbucks account, knowing they'll use it eventually. 41% of US and Canadian users pay with their Starbucks card. At the end of 2019, users held a collective $1.5 billion in balances. To put this in perspective, 85% of all US banks have less than $1 billion in total assets. Customers will, of course, eventually exchange this money for coffee, but in the meantime, unknowingly provide Starbucks with a $1.5 billion loan at 0% interest. That's money Starbucks could simply invest in the market, earning free money from the generosity of its users.
Alright guys, now for what you all came to see. Many of you that know me know I have a very strong opinion on the Starbucks unions. It's probably one of the hardest things they're dealing with now. It's probably contributing to the stock price and why it's declined recently. So I'm going to be going over it and explain why it's happening, why it's an issue, and why I don't think it will be a huge problem over the long term for Starbucks. Alright, so where I'm from, a year ago, Starbucks employees basically started a union against the company. Starbucks is vulnerable to this because Starbucks has company-owned stores, not franchisees like McDonald's. So this automatically puts Starbucks employees at an advantage against the company, because if it were like a franchisee, you could just blame it on the franchisee. They get terminated, problem solved, right? So the union charge is basically being taken over by millennials and Gen Z. So it's just a lot of young people who may not have their minds, fully developed, if you know my gist here. Starbucks offers incredible benefits that its competitors plainly do not compete with. For example, higher than average pay, stock benefits, healthcare, paid time off, etc. Find another fast food chain or local restaurant that you could work at that offers those same benefits, if not more. Most of Starbucks' workers are college and high school kids. Not a lot of them are crazy contributing members to society that make huge changes in our world. And I just think it's ironic that they're making all these complaints about how they have these bad working benefits and unfair conditions. Go somewhere else then. You don't need to stay around and complain about it, because if you were to go somewhere else in the same industry, you'd straight out be getting worse pay, worse benefits, etc. And quite frankly, if you were putting the time that you're complaining into finding a more lucrative career, maybe you wouldn't be bitching about Starbucks right now. Alright, guys, I'm sorry for my little rant. It's something I feel a little passionate about, because I really feel this is an issue that Starbucks was vulnerable to, and that the employees, aren't completely unjust for this. But I think interim CEO Howard Schultz will take this very seriously and get the problem resolved, and I don't expect it to be an issue for the long term.
Of what is happening. You're exactly right. We're right in the middle of it. Because if a company as progressive as Starbucks, that has done so much and is at the 100th percentile in our entire industry for benefits for our people, can be threatened by a third party, that means that any company in America can. Now, I've said publicly, I'm not anti-union, but the history of unions, and we have to talk about this, the history of unions is based on the fact that companies in the 40s, 50s, and 60s abused their people. We're not in the coal mining business. We're not abusing our people. But the sweeping issue in the country is that businesses are not doing enough, and the business is the enemy. And so our vision for our people and our company is we have a different vision. We don't believe that a third party should lead our people. And so we are in a battle for the hearts and minds of our people. And we are going to be successful because the issue is what's true. What's the truth? Now, building a great, enduring company is about one thing, the currency of trust. Can you build trust with your people? Can you build trust with your customers? And so, for 51 years, we've been able to do that. And now a third party is questioning that. And so the burden of proof is on us, and we will demonstrate authentic servant leadership.
That's a clip from Howard Schultz, the interim CEO, and how he feels about the current union situation. And I'm now officially offering a challenge. Any of you guys that know anybody that is part of the Starbucks union, tell them I challenged them to a debate on my channel. We'll do a live stream. We'll bring them on here, and we'll debate the unions. I'd love to do it in a nice, civil, and respectful manner. And so if you know anybody that's part of the unions or works for Starbucks as pro-union, let them know about this challenge. Bring them on. We'll see how it goes. Right now, I think Starbucks has good pricing power to combat inflation, but if we were to head into a recession again, their dividend, I think they would still be sustainable, because the 2020 recession, they kept their dividend and kept paying it out, which makes me confident that Starbucks will keep paying their dividend and thrive over the long term. And guys, I challenge you to go out to a Starbucks, see how booming their stores are right now. Their drive-thrus are packed, their stores are packed, and that's definitely a business and stock I want to be part of. Guys, I want to thank you guys so much for sticking it out through the video. It really means a lot. I put a lot of work into this video. It took me a long time, so it would mean a lot if you guys could subscribe if you find content about dividend and stock market investing valuable and you found this interesting. It would mean a lot. Smash the like button, subscribe, turn on post notifications. Let me know in the comment section what you think, what stocks you'd like me to review. Did I miss anything? And of course, do dividend stocks, not drugs. Have a good one.